Well, hello, everybody. Steven Sitkowski here. Welcome to this week's edition of Market Insights, where I take a look at what's going on in the stock market, freshly back from a week on the island of Lanai. If you ever get the opportunity, go. There's a Four Seasons. They're not giving away rooms. So, really focus on your investing account. Um, Set aside a little piece and treat yourself if you get the opportunity. And this has been the market to give you that chance. So let's get to it. Hope you had a splendid weekend. Quick reminder that everything that we do here is for educational and informational purposes only. It is not intended as investment advice. What I'm doing is I'm sharing with you my own thoughts, my own observations as it relates to the market in the hopes that some of these insights might make you a better investor. So what's moving the markets? S&P hit a record high today to kick off our week. That's always nice. Been a whole lot of money to be made out there. I hope you've gotten your fair share. Earnings season is set to kick off. So we had a few earnings announcements on Friday, but this week it becomes much more robust. The bull market now officially 2 years old. Would that make it a baby bull? 10-year Treasury and bonds are closed today, sits at 4.08%. And oil prices fell a bit on OPEC's comments relative to demand. Oil's now at about $74 per barrel. What to watch this week? Nothing really today. Tomorrow we get the Empire State Manufacturing Survey. Is that going to move the market? Probably not. Wednesday, import price index. Is that a market mover? No. Thursday, initial jobless claims come out, expected to be 245,000. It was a whopping 258,000 the previous week. U.S. retail sales supposed to move up to 0.3%. Take out autos and pretty much flat. You have the Philly Fed Manufacturing Index. Market mover, more than likely not. I think the biggies on Thursday are going to be initial jobless claims and U.S. retail sales. Nothing really on Friday. Kind of a slow news week. Here's last week's heat map where Tesla got spanked. Oil companies were generally down. Boeing dealing with their strike, they were down. Most everything else was green. Look at NVIDIA, up 9.14%. And the 1-year heat map, of course, NVIDIA, the big one, are up nearly 200%. So if you're in NVIDIA, you think we're in a great stock market. If you've been in Tesla for the last year, there's been more of a struggle, right? Down 15%. So, it's not about the market. It comes down to your ability to pick individual stocks within that market. But you can certainly see all kinds of chance to make money for the last year. Microsoft up 27%, Apple 27%, Meta 84%, Amazon 42%, Costco 61%, Walmart 51%. Pretty tough to go wrong. Should have been a great last year for you. Market breadth for the week. Look at the advancers versus decliners. Kind of a push. When it comes to new highs versus new lows, very bullish. 367 new highs to 70 new lows on the New York Stock Exchange. For the NASDAQ, 474 versus 337. The big winners for the week: Uber up 16%, Supermicro 15%, Norwegian Cruise Lines 14%, Carnival 13%, Air Products and Chemicals, CrowdStrike, Fastenal, Royal Caribbean round out the top gainers. Money is pouring into Chinese equities. If you wanted to participate in the equivalent of the US S&P 500 in China, there's an ETF called FXI. Cash is not king, which is a good thing. When you look at households, only 15% of their money is in cash, earning 1-2%. 48% is in equities. It's where all the money is to be made. What happens when the Fed cuts rates in non-recessionary episodes? S&P goes up 25%. The big winners: healthcare, financials, staples, communications, industrials. Interestingly, tech is down here. Room to run. So this is where we are so far in this bull run. This is how far the bull runs typically get extended. So we got room to go. Absolutely. New bull markets, first 2 years, we're up 60%. You can see that's pretty much the norm. So for those who have said, oh, the market has gone too far too fast, not based on historical standards. Projected upside based on price targets versus closing prices. Analysts see the most opportunity in technology, followed by communication services, followed by healthcare. So those are the three sectors they expect to beat. Inflation concerns, they persist, as evidenced by the red, but year-ahead inflation expectations are falling significantly. So at some point, this ought to ebb. Earnings announcements by week. So we are now, in this week, we're going to get 12% of the S&P announcing. It'll be the next 2 weeks when about 60% of S&P companies announce. Those are definitely potential market movers. Market sentiment right now, really solid. Historically, 37.5% of respondents are bullish. Right now, that is 49%. Historically, 31% are bearish. That's all the way down to 20.6%. How much will the Fed cut? Well, the latest CMA FedWatch tool indicates there's an 86.2% probability of a 25 basis point cut in November. We're a ways away from that. We've got about 3 weeks to go and lots of data that'll come out between now and then. 1 year sector returns, tech by a mile. Last year, the tech sector is up 52.13%. The S&P is up 35%. So those that have beat: industrials, communications, financials, utilities was a match. And everything else has produced less than an average return. Energy, only 4% when the market went up 35%. Let's take a look at the charts. See how things are looking. Let's go to the SPX. This is the S&P 500. We'll be looking at a 6-month chart, and it is just a thing of beauty. 6 months ago, we closed at 5,061. Now we're 58.48. See the 50-day moving average sloping up. S&P is above that 50-day. and it's just been grinding higher. How about the Qs? We haven't quite we exceeded that little hump. We haven't quite gotten to all-time highs, which would be at 502 or at 496, but we certainly appear to be headed there. And what does small cap look like? Much squirrelier. I mean, up, down, up, down, up, down. It's been moving a little bit higher, but there's a whole lot of noise right in here that it needs to break through before we could be confidently bullish. But overall, charts look great. Market looks great. We'll have some earnings announcements this week. The next couple of weeks, that'll ramp up. We'll have a whole bunch to talk about moving forward. So until then, be safe, be blessed. Bye for now.